Have you ever wondered why some traders seem to catch massive market moves while you're left watching from the sidelines, kicking yourself for missing the obvious? Here's what nobody tells you about explosive market trends. They don't just appear out of nowhere. Every single major price movement in history gave early warning signals, clear, readable patterns that separated those who built fortunes from those who spent years spinning their wheels chasing shadows. The frustrating part isn't that these signals are hidden or require some secret formula to decode. The problem is far more fundamental. Most traders are looking at completely the wrong thing. Imagine standing at the base of what's about to become an avalanche. There are subtle signs everywhere, small shifts in the snowpack, temperature changes, barely perceptible movements. But if you're staring at the wrong mountain, or worse, if you're so focused on individual snowflakes that you miss the entire structure about to collapse, you'll never position yourself to benefit from the massive force that's building right in front of you. That's exactly what happens in markets every single day. Traders fixate on hourly candles, obsess over minor support and resistance levels, and convince themselves that the next 3% move is going to be their breakthrough moment. Meanwhile, the real wealth-building opportunities are assembling themselves in plain sight, waiting for someone with the clarity to recognize what's actually happening beneath the surface noise. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Has this ever happened to you? You're analyzing the market, doing your research, and something catches your attention. Maybe it's a sector that's been beaten down. Maybe it's an asset that's finally showing signs of life after months of consolidation. You take a position, feeling smart about your timing. Then it starts moving, 5%, 8%, 12%, and that familiar anxiety creeps in. What if it reverses? What if I give back these gains? Better to lock in the profit now. So you sell. You feel relieved, even proud of your discipline. Then the universe delivers its cruelest lesson. That same position continues climbing. Not just a little more, but relentlessly, day after day, week after week, until it's delivered returns that would have fundamentally altered your financial reality. And you're sitting there with your modest gain, watching what could have been, knowing you recognized the opportunity early, but lacked something critical to actually capitalize on it. This isn't about bad luck or missing information. This is about a fundamental misunderstanding of how wealth is actually created in markets. Because here's the truth that might surprise you. The biggest money isn't made by being right about direction. It's made by recognizing when a trend is in its infancy, when the setup is forming, and then having the framework and conviction to stay positioned while that trend unfolds over time. What you're about to discover is the one specific market configuration that appears before virtually every explosive trend begins. This setup isn't hidden in complex algorithms or reserved for institutional traders with Bloomberg terminals. It's visible to anyone who knows what they're looking for, and once you understand this pattern, you'll start seeing opportunities that have been invisible to you until now. Stay with me, because what we're about to explore will fundamentally change how you identify high-probability trends before the crowd even realizes something significant is happening. The hidden truth behind this entire approach is simpler than you might expect, which is precisely why most people overlook it completely. We've been conditioned to believe that successful trading requires layers of complexity, multiple indicators stacked on top of each other, sophisticated algorithms, real-time data feeds, and constant monitoring. But that's actually the exact opposite of what creates consistent results. The real transformation happens when you strip away all the noise and focus on the one thing that actually matters: understanding the difference between genuine momentum building beneath the surface and the meaningless fluctuations that distract everyone else. Think about how most traders approach the market. They're drowning in information, overwhelmed by conflicting signals, constantly second-guessing themselves because there's always another indicator suggesting something different. This isn't analysis, it's paralysis disguised as diligence. The breakthrough comes when you realize that clarity doesn't come from adding more complexity to your process. It comes from developing the discernment to recognize what's actually significant and having the courage to ignore everything else. Now here's where the real challenge reveals itself, and it's not what you'd expect. Let's say you've actually identified one of these setups early. You've done the work, you've recognized the pattern, and you've positioned yourself ahead of the crowd. Congratulations! You're now facing the hardest part of this entire journey, because spotting the opportunity was just the entrance exam. The real test is what happens next. When the market does what markets always do, it tests your conviction relentlessly. This is where the psychological battle begins, and it's a battle that most traders lose, not because they lack intelligence or skill, but because they fundamentally misunderstand what they're up against. The market will shake you. It will create moments of doubt that feel absolutely justified. You'll watch your position pull back just enough to make you question everything. Headlines will appear that seem to contradict your entire thesis. Other traders will exit, taking their profits and making you feel foolish for holding on. This isn't random. It's the natural rhythm of how major trends develop, separating those who understand the journey from those who only see individual moments. The impact of recognizing this pattern goes far beyond just improving your trading results. It fundamentally shifts your relationship with uncertainty itself. Most people spend their entire lives trying to eliminate uncertainty, searching for guarantees before they take action. But the most significant opportunities in any domain, whether markets, business, or life, exist precisely because uncertainty keeps the majority paralyzed. When you develop the framework to move decisively in the face of calculated uncertainty, you gain access to possibilities that simply don't exist for those still waiting for perfect clarity. Now, I want to go even deeper into this topic by exploring what actually happens inside your mind during these critical moments, because understanding the psychological dynamics at play is what separates temporary success from sustainable mastery. If you've ever exited a winning position too early and regretted it later, write in the comments, "I felt this." I want to know how many of you recognize this exact pattern in your own experience. There's a revelation that completely changed how I approach every single market decision, and it's something that might initially sound counterintuitive or even defeatist. The market doesn't care about your opinion. It doesn't care about your analysis, your predictions, or what you think should happen based on fundamentals or technicals. The market simply moves according to forces far larger than any individual participant can control. And here's the liberating part of this realization. The moment you stop fighting against this reality and start flowing with it, everything shifts. Most traders approach markets like they're solving a puzzle that has a definitive answer. They believe that if they just analyze hard enough, study long enough, or find the right combination of indicators, they'll be able to impose their will on price action. This is the fundamental error that keeps people trapped in a cycle of frustration, because what they're really doing is arguing with reality itself. They're insisting that the market should behave according to their expectations, and when it doesn't, they either force trades that go against the momentum, or they freeze completely, paralyzed by the disconnect between what they predicted and what's actually happening. If you're serious about understanding markets at a deeper level, hit that subscribe button. I'm building a community of thoughtful traders who focus on substance over noise, on real insight over quick tricks. Join us. The transformation occurs when you shift from prediction to observation, from control to alignment. Think about a surfer waiting for the right wave. They're not trying to create the wave or dictate where it should go. They're watching, reading the ocean's patterns, and when the right conditions appear, they position themselves to ride the energy that's already there. That's the exact mindset that separates consistently profitable traders from those who struggle indefinitely. Behind the scenes of every major winning trade is this same principle. Surrender the need to be right about every detail, and instead, focus on being aligned with what's actually happening. This doesn't mean abandoning analysis or trading randomly. It means your analysis serves to identify where momentum is building, not to predict exact turning points or argue with current price action. Which brings us to one of the most destructive beliefs in trading, and it's one that sounds perfectly logical on the surface. The idea that you need to buy at the absolute bottom and sell at the exact top to be successful. This perfectionist approach is actually what prevents most people from ever achieving consistent results. Because while you're waiting for that perfect entry, while you're trying to time the absolute low, the trend is already underway. And by the time you finally convince yourself to enter, you've missed the most comfortable portion of the move. Here's what actually creates wealth: catching the middle. That substantial, obvious section of a trend where the direction is unmistakable and the momentum is clearly established. Yes, you'll leave. Some profit on the table at both ends. Yes, someone else might have entered lower or exited higher, but you know what you won't experience? The paralysis of waiting for perfection while opportunity after opportunity passes you by. The beauty of focusing on the middle is that it's actually readable. The train is already moving at cruising speed, the direction is clear, and you still have the majority of the journey ahead of you. This mindset shift, from chasing perfection to capturing the obvious middle, removes so much psychological pressure that it actually improves your decision-making across the board. Now let me show you exactly what this looks like in practice, because understanding the concept intellectually is one thing, but recognizing it in real market conditions is where the real skill develops. If this perspective on letting go of perfection resonates with you, drop in the comments. Middle is enough. What separates those who consistently capture major trends from those who constantly miss them isn't access to better information or superior analytical tools. It's something far more fundamental: the capacity to take decisive action without the comfort of certainty. This might sound reckless at first, but stay with me, because there's a crucial distinction here. Acting without certainty doesn't mean acting randomly or impulsively. It means understanding that waiting for absolute confirmation is itself a decision, and usually the wrong one. The uncomfortable truth is that certainty only arrives after the opportunity has largely passed, when everything aligns perfectly, when all the indicators confirm, when the trend is obvious to everyone. You're no longer early, you're late. The crowd has already piled in, the easy money has been made, and you're entering at precisely the moment when risk is highest and potential reward is smallest. This is the cruel irony of seeking certainty. The very thing you're waiting for is what eliminates the opportunity you're trying to capture. Your competitive advantage doesn't come from knowing more than everyone else or from having some secret indicator that provides crystal clear signals. It comes from your willingness to act on probabilistic information while others are still frozen, waiting for guarantees that will never arrive. Behind every significant position that created substantial wealth was a moment of uncertainty. A point where the decision-maker had to move forward despite incomplete information, despite doubt, despite the possibility of being wrong. This brings us to another paradox that most people struggle to accept. The best trading often looks like doing absolutely nothing. We live in a culture that worships action, that equates busyness with productivity. The entire infrastructure of modern trading, real-time quotes, instant execution, mobile apps, constant notifications, is designed to keep you engaged, to keep you trading. But here's what nobody tells you. Activity is not the same as progress. In fact, excessive activity is usually the enemy of substantial returns. Think about what actually happens when you've identified a genuine trend and positioned yourself correctly. The hardest thing you'll ever do is sit still and let that position work. Every fiber of your being will scream at you to do something, to take profits, to adjust your position, to second-guess your entry. The platforms make it so easy to exit with one click. The constant price updates create the illusion that you need to be monitoring and adjusting continuously. But the reality is that your greatest edge in these moments is your ability to resist that urge completely. The journey toward understanding this principle usually involves painful lessons. You exit a position that was working perfectly because you couldn't stand the discomfort of sitting still. You watch it continue without you, realizing that your impatience cost you far more than any potential loss ever could have. This pattern repeats until you finally internalize the truth. Patience isn't passive. It's an active choice to prioritize long-term results over short-term comfort. What I'm about to reveal next might challenge everything you've been taught about risk management, because the conventional wisdom around protecting yourself actually prevents you from achieving the results you're capable of. If you've recognized that your own impatience has cost you more than market movements ever have, write in the comments, "Patience is power." One of the most liberating discoveries you'll ever make about markets is understanding their natural breathing pattern. Prices don't surge upward in relentless straight lines, and believing they should is what causes most traders to panic during the exact moments they should be holding steady. Every legitimate trend, every single one, moves in waves. It advances, pauses to catch its breath, pulls back just enough to terrify those without conviction, then resumes its primary direction. This isn't a flaw in the trend. This is how healthy trends actually develop. The challenge is that in the moment these pullbacks feel catastrophic, you watch your unrealized profits shrink, doubts creep in, and that voice starts whispering that maybe you were wrong all along. The difference between a correction and a reversal isn't always obvious when you're living through it, which is precisely why most people exit during these natural pauses. They mistake the market taking a breath for the market changing its mind. Behind the scenes of every major trend are countless participants who recognized the opportunity early but couldn't withstand these inevitable tests of conviction. What creates the real separation between those who capture substantial moves and those who constantly get shaken out isn't analytical sophistication, it's emotional resilience. You can have the most brilliant analytical mind, capable of identifying perfect setups and understanding market structure at a deep level, but if you lack the emotional fortitude to sit through volatility, all that intelligence becomes useless. I've watched incredibly smart people, individuals who could explain market dynamics with precision and clarity, fail repeatedly as traders because they couldn't handle the psychological pressure when their positions moved against them temporarily. The hidden truth here is profound. Your success isn't determined by how much you know. It's determined by how you respond when what you know is being tested. Anyone can hold a winning position when it's moving smoothly in their favor. The real test comes when headlines turn negative, when other traders start exiting, when your position pulls back and every instinct screams at you to cut your losses. These moments reveal whether you're truly aligned with the opportunity or just along for the ride until things get uncomfortable. This is where the transformation from casual trader to serious market participant actually occurs, not in the studying, not in the analysis, but in those moments of maximum discomfort when you have to choose between your plan and your emotions. Most people underestimate how much of trading is actually a psychological endurance test. They enter this arena thinking it's an intellectual challenge, only to discover that their greatest obstacles aren't on the charts, they're in their own minds. The impact of developing this emotional resilience extends far beyond improving your trading. Results. It fundamentally changes how you navigate uncertainty in every area of life. When you've trained yourself to remain centered while markets are testing you, when you've learned to distinguish between genuine danger and temporary discomfort, you carry that capability into every decision you make. What I'm about to share next connects all of these concepts into a practical framework you can actually implement, because understanding these principles intellectually is valuable, but knowing how to apply them when real money is on the line is what actually changes your outcomes. If you've ever had the right analysis but exited because you couldn't handle the emotional pressure, type in the comments, "Mind over market." Here's something that might completely change how you measure your own trading success. You don't need to be right most of the time to build substantial wealth. In fact, you could be wrong on 6 out of every 10 trades and still dramatically outperform someone who's right 8 times out of 10. This sounds impossible until you understand the mathematics behind asymmetric outcomes. When you structure your approach so that your average winner is significantly larger than your average loser, the percentage of winning trades becomes almost irrelevant compared to the quality of those wins. This revelation removes an enormous psychological burden. You're no longer chasing perfection or beating yourself up over losses. Instead, you're focused on something far more achievable, keeping your mistakes small while giving your best ideas enough room to truly develop. The transformation here is profound because it shifts your entire relationship with being wrong. Losses stop being failures and become simply the cost of doing business, expected parts of a process that's mathematically designed to work in your favor over time. Behind the scenes of every consistently profitable trader is this same understanding. They're not trying to avoid losses. That's impossible. They're managing the size and impact of those losses while maximizing the upside when they're right. This approach creates a psychological freedom that actually improves decision-making because you're not paralyzed by the fear of being wrong on any individual trade. Now let me reveal something that most people never discover about how major trends actually form. These explosive moves don't just materialize out of nowhere. They're built slowly, deliberately, often invisibly to those who don't know what to look for. Markets communicate constantly through price action, volume, and behavior around key levels. Every movement is telling a story about who's buying, who's selling, and most importantly, who's accumulating positions before the obvious move begins. Think about how institutional money actually operates. They can't just pile into a position all at once that would drive prices against them immediately, defeating their own purpose. Instead, they accumulate gradually, often during periods when retail traders are losing patience and exiting. These large players use pullbacks as opportunities to add to positions, creating distinctive patterns in how price behaves. You'll see tests of support that hold despite negative news, subtle increases in volume on up moves compared to down moves, periods where prices consolidate but never truly break down. This is the language of accumulation, and once you learn to read it, you start seeing these setups everywhere. The termed hidden truth is that major trends announce themselves through these early patterns, but only to those who've trained themselves to recognize the signals. Most traders are so focused on the noise, the daily headlines, the minor fluctuations, that they completely miss the underlying structure being built right in front of them. The journey toward reading markets this way requires patience and observation, watching how real trends develop over time rather than just looking for quick patterns to exploit. What makes this approach so powerful is that it positions you ahead of the recognition phase, that moment when everyone suddenly realizes something significant is happening and prices accelerate. By then, you're already positioned, and the crowd entering late is actually working in your favor, driving the trend you identified early even further. If you're starting to see how these pieces connect, the patience, the conviction, the ability to read underlying structure, write in the comments, "I'm learning the language." The difference between those who execute their ideas successfully and those who constantly sabotage themselves usually comes down to one simple distinction: whether they made their decisions before entering the position or during the chaos of price movement. This might sound overly simplistic, but think about what actually happens when you enter a trade without a clear plan. The moment your money is at risk, your brain chemistry changes. Objectivity disappears, replaced by a cocktail of hope, fear, and reactivity that makes rational decision-making nearly impossible. Every decision you make while watching your position fluctuate is contaminated by emotion. You're no longer thinking strategically, you're reacting to feelings. This is why the most critical work happens before you ever click the buy button. You need to map out your entire response system in advance. What happens if the position moves in your favor? What happens if it moves against you? What happens if it just sits there doing nothing? When you've already made these decisions during a moment of clarity, you're not wrestling with yourself in real time. You're simply executing a predetermined plan, removing the emotional component from the equation entirely. Behind every blown trade, every premature exit, every position held too long out of stubbornness is the same root cause: making decisions in the heat of the moment instead of following a plan created when thinking was clear. The transformation occurs when you recognize that trading isn't really about reacting to markets. It's about preparing for markets. Your actual edge comes from the discipline of following your plan regardless of how you feel in the moment, trusting the version of yourself that was thinking clearly over the version that's emotionally compromised by having capital at risk. This preparation connects directly to another principle that separates those who capture the best opportunities from those who perpetually arrive late. Understanding that by the time everyone agrees something is a good idea, it's usually too late to position yourself favorably. The crowd moves in predictable patterns, and those patterns are almost always lagging indicators rather than leading ones. When a trend becomes obvious enough that your neighbor is talking about it, when headlines are shouting about it, when everyone suddenly agrees on the direction, that's typically the end of the opportunity, not the beginning. The uncomfortable truth is that the best entries feel wrong. They happen when most people are still skeptical, when the narrative hasn't formed yet, when you're operating on structure and conviction rather than confirmation from others. Smart money understands this deeply. They're accumulating positions during periods of doubt and distribution, building their positions before public awareness catches up. The journey toward independent thinking is challenging because it requires you to trust your own analysis even when it diverges from popular opinion, to act when others are hesitant, and to remain committed when everyone else is questioning. What I'm about to share brings all of these concepts together into something you can actually implement starting today, because understanding these principles is valuable, but having a practical framework for applying them is what actually changes your relationship with opportunity. If you've recognized that following the crowd has kept you consistently behind the curve, drop in the comments, "Early beats easy." Here's something that took me years to fully accept, and it's probably the most important insight I can share with you today. The market isn't your problem, you are. Every mistake, every blown trade, every opportunity missed or abandoned too early, the root cause isn't out there on the charts. It's in here, in how you respond to uncertainty, in how you handle risk, in how you manage the gap between what you plan to do and what you actually do when emotions take over. Trading has this remarkable way of exposing every psychological weakness you have. It's like a mirror that reflects back your deepest patterns, showing you exactly where your discipline breaks down, where fear overrides logic, where greed clouds judgment. Most people approach markets thinking they need better strategies or more sophisticated analysis, completely missing that their real obstacle is internal. You can have the most brilliant trading system ever designed, but if you lack the emotional regulation to follow it consistently, that system is worthless. The journey toward consistent results isn't primarily about learning more market mechanics. It's about mastering yourself. It's about developing the awareness to notice when your psychology is hijacking your decision-making process and having the discipline to interrupt those patterns. This internal work is harder than learning any technical skill because it requires confronting uncomfortable truths about how you actually behave under pressure, not how you imagine you behave or how you wish you behaved. Behind every transformation from struggling trader to consistent performer is this same revelation. The decisive battlefield isn't on the price charts, it's in your mind. Once you shift your focus from trying to control markets to developing control over your own responses, everything begins to change. Your edge stops being about prediction and becomes about execution, about following your plan regardless of emotional turbulence. This inner mastery connects directly to understanding a fundamental distinction that most traders never grasp: the difference between ripples and waves. Markets are filled with constant movement, endless fluctuations that create the illusion of opportunity everywhere you look. These daily jiggles, these minor price swings that dominate most traders' attention, they're ripples, they're noise, and chasing them is what keeps the majority perpetually busy but perpetually unprofitable. Waves are different entirely. These are the substantial, sustained movements that actually create wealth, the trends that carry prices far from their starting points over weeks or months. The mathematical reality is stark and undeniable. A trader who identifies and captures just 3 or 4 major waves in a year will dramatically outperform someone who makes hundreds of trades chasing ripples. This isn't opinion, it's arithmetic. The cumulative impact of a few significant wins structured with favorable risk-reward far exceeds the results of constant activity. What separates these approaches is focus. Ripple chasers are scattered, reactive, constantly seeking the next small move. Wave riders are selective, patient, waiting for setups that actually matter and then committing fully when those opportunities appear. The transformation from one mindset to the other requires letting go of the need to always be active, accepting that the best trading often involves long periods of doing nothing while you wait for genuine opportunity. If you've realized that your constant activity has been preventing the results you're actually capable of, write in the comments, quality over quantity. If you've made it this far, you're already different from most people who click on trading content. You're not looking for shortcuts or get-rich-quick schemes. You're here because you understand that real mastery comes from shifting how you think, not just learning new techniques. And that's exactly the kind of trader who actually makes it in this game. Everything I've shared with you today, from reading market language to developing emotional resilience, from positioning ahead of the crowd to focusing on waves instead of ripples, these aren't just concepts to understand intellectually. They're principles to embody, to practice, to integrate into how you actually approach markets every single day. The setup that makes trends obvious isn't really a chart pattern or an indicator. It's a mindset, a way of seeing beneath the surface noise to recognize what's actually building before everyone else catches on. I create content like this specifically for people who are serious about transformation, who recognize that success in trading mirrors success in life. It's about discipline, patience, conviction, and the courage to think independently. If that resonates with you, hit that subscribe button, because we're building something different here. This isn't about hype or hot tips. It's about developing genuine skill and understanding that compounds over time. And if this message landed for you, if you recognize yourself in these patterns we've explored, drop a comment saying, "This was meant for me. I read every single one, and I genuinely want to know that this perspective is connecting with people who are ready to approach markets differently." If you found value in what we covered today, clicking that like button helps this reach others who need to hear it. Sometimes one shift in perspective is all it takes to unlock years of struggle. There's a video right here that dives into exactly how to maintain conviction during those inevitable pullbacks that shake most traders out of winning positions. It's the perfect complement to everything we just discussed. Click and continue with me over there, because understanding these concepts is just the beginning. Implementing them is where the real transformation happens.